Fed Chairman Jay Powell is going to be testifying again today, this time in front of the Senate Banking Committee. Yesterday, Chairman Powell said that the economy could still use some improvement, especially for the labor markets. Joining us right now with a preview of what we can expect from today's hearing is Senator Pat Toomey. He's the ranking member of the Banking Committee, and he will be there asking some questions of his own today. Senator Toomey, after what you saw yesterday with the Fed chairman, what do you anticipate asking him today? What did you not hear that you'd like to dig in a little deeper on?
Well, Becky, thanks for having me. I remain concerned that the Fed has constructed a paradigm that almost guarantees that if this inflation that is now with us, right? We're not speculating about future inflation. It's already here. And if it lasts longer than the Fed thinks, and they've been wrong about the level of inflation, they've been underestimating this at least all of this year. And if they're wrong about how brief it is going to be, then they're going to be behind the curve. And I want to push him on that. I want to explore that. I've spoken with him privately about that. I also think, look, there's a question about why and how they came to the decision to subordinate price stability to full employment, especially at a time when they know that Congress has gotten in the way of full employment, right? Paying people more not to work than they get paid to work. It's not a great way to maximize employment, and yet the Fed has decided to take it upon itself to prioritize full employment and maybe even full employment of demographic subsets of our population. So this is new, right? We haven't had a Fed take this approach. I think it's running significant risks. I hope Jay Powell is right, and this spike in inflation turns out to be a brief and passing thing, but I'm worried it might not, and I'm worried they're behind the curve.
So if you've already had these conversations with him in private, A, what's he told you, and B, does that mean today is just for show so that everybody else gets to see it?
No, what's different is that we have new data, right? I mean, the last time I spoke with the chairman, we didn't have the 5.4% CPI print, for instance. So it's gotten worse, and that changes things. I don't think it's speaking out of school to say what he has said privately, is saying that he said publicly, which is if inflation starts to really take hold and be enduring, they're going to move. They will change their policy to address that. I just think they've put themselves in a situation where, as I say, they'll be behind the curve. They'll be reacting late. They already are, in my view. I mean, I can't for the life of me understand how it makes sense to be buying $40 billion of mortgage-backed securities every month when the housing market is going through the roof and is unaffordable in many places. Why do you need to continue to do this? So I think he does need to hear that pushback. And there are other topics we'll get into as well.
You know, we had Larry Fink on the program yesterday, also former Treasury Secretary Stephen Mnuchin. Both of them think that this is not going to be transitory. They think that these higher inflation numbers are around to stay. And it kind of strikes me that I'm not sure that everybody can agree on what transitory is. What does that mean? That it's gone in 3 months, that it's gone in 6 months, that it's gone a year from now?
Well, This is part of the problem with the paradigm they've established, right? Not only is it transitory, which is undefined, but also they want to tolerate a rate of inflation above the 2% target for some indeterminate period of time. Well, we have it. It's with us. How much longer does that go on? This is all very subjective and it's undefined, and I think that's a little problematic. I understand really thoughtful and well-informed and smart economists have a lot of disagreement about this. But I think there's a very clear case that it's quite plausible that this inflation could be with us for quite a while and could get worse. And that's the risk that I think the Fed needs to be very, very sensitive to.
Shepard Smith here. Thanks for watching CNBC on YouTube.